Ajay Bodke, Head of Investment Strategy with Prabhudas Lilladher also joins us. Ajay, good morning and thank you for joining us. So let's talk about the broader market setup. For the moment, it looks like we have a roof in place for the Nifty. Nifty is not going anywhere.
Yeah, I think I tend to agree with you. The market is in the short term in a mood to consolidate. Although I think, the overall macroeconomic numbers that are coming out are clearly very supportive of a midterm bull market for India. I think same time last year, the crude oil prices, the Indian crude basket was $109. Today you're looking at $101. And every dollar drop in crude oil prices leads to a saving of under recovery of 3,300 crores. So clearly 33,000 crores worth of roughly around 22,000 crores worth of under recoveries the country has saved, 60% of which will go towards reduction of fiscal deficit and 40% will go towards reduction of losses for ONGC, OIL and GAIL. I think for the first time in 7 years we are looking at diesel prices coming down. WPI numbers that came out yesterday after a 5-year low at 3.74%. And what is most heartening, Nikunj, out there is the food inflation numbers in August, which have come in at 5.15%, vis-a-vis 8.43% in July. And this augurs well because in CPI numbers that will come out for August, food is around 50% of the total CPI basket. And one seminal development that's happened in the morning is the big daddy of all in the PSU banks, SBI, has cut the deposit rates by 25 basis points for the biggest 1 to 3 year tenure basket that they have, clearly signaling that as we go forward, the RBI will have to adopt a more accommodating monetary policy, albeit towards the end of the current financial year. And that's why I think you'd asked a question about why the PSU banks are doing very well. It's because I think the market sort of is sensing that as we go forward, I think the rates should over time come down, and hence the bond book that these banks have will clearly see a large amount of appreciation. And hence I think the market is cottoning on to that, leading to the PSU banks again showing some signs of life.
Ajay, you've always got a bullish call on the mid-cap capital goods space. You've talked about stocks like Cummins or for that matter Thermax, Crompton as well. But these have already run up a fair bit from their 2013 lows. Is there still money to be made in the cap goods names when it comes to the mid-cap theme, or do you think it's time to profit take and perhaps put that money somewhere else?
I think, as I said, in the very short term, the PSU banking space, which had underperformed the other pockets of the market, looks quite attractive. I think we are advocating a medium-term bet on SBI. We're looking at a price target of 3,000 rupees in SBI a year from now. And there we are factoring in a revenue growth of around 14% this year and 15% next year. And turning into bottom line growth of 35% this year and 33% in next financial year. And the stock is trading at around 7.7 times, 1.1 times price to adjusted book FY16. BOB is another bank I think we are advocating investors to look at in the medium term, with a price target of around 1,000 rupees in the medium term in BOB. There again we are factoring in a stronger revenue growth of 21% this year, followed by 15% next financial year, and a bottom line growth of 15% this year and 24% next financial year. And the stock is trading at around 0.9 times FY16 price to adjusted book. Coming to your capital goods question, I think the space which has a lot of potential to run up, we feel, is the road sector space, because the government has said that 5,000 kilometers of roads would be bid out in this current financial year, and they've given tremendous flexibility to NHAI in terms of how much EPC and how much BOT proportion they would like to go in. And Ashoka Buildcon is a company that our analyst is extremely positive on. Right. We're expecting a price target of 181 in the medium term in Ashoka Buildcon.
Okay, Lupin, and that was the big showstopper. I'm just going to capture the price movement Lupin. And ever since they've come out with a good set of Q1 numbers, the run-up in Lupin has been quite extraordinary. That stock indeed is going gangbusters. Ajay, what explains this, this powerful rally in Lupin? I know they came out with good set of numbers, but that stock in last 1 month is just not correcting. It is just moving from strength to strength.
I think in the pharma space, if you look at, I think what's happened is the company that has outperformed over the last few years, that is Sun Pharmaceuticals, has seen some sort of a profit taking. And our interaction with investors is indicating that I think there's some sort of a reshuffle happening, some top slicing happening there, and money moving into the other large pharma companies. And you mentioned about Lupin. There's also Cipla, which is an exceedingly well in last 1 month. And I think some amount of money is shifting to these two stocks from funds. We are fundamentally very positive on Cipla, and there we are expecting it's among our top picks, and with the medium term we are expecting a price target of around 650 in Cipla, factoring in a very strong 18% CAGR in revenue growth for FY 15-16, and it will be 25% growth in bottom line we are factoring in for FY 16. The company's ROEs are trending up from 14%, they'll move to around 16% in FY 16, and the company is trading at around 23 times FY 16 earnings. So I think in pharmaceutical space, Cipla is what we would urge investors to look at in the medium term.
Ajay, how are you going to approach the IT sector per se right now? We're seeing some weakness trickle in. Do you think it's time to add more positions in the weakness currently?
I think I would tend to agree with you, because the global economy is on an upswing, with obviously the exception of Europe. I think you're seeing America, Japan and the UK economic growth picking up quite strongly, and in particular America, the economy has been showing extraordinary strength. So I think, which is the largest market, for companies like Infosys, I think, are advocating investors to have judicious mix of some defensives as well as some cyclicals. And in IT space especially, we are asking investors to do some allocations to companies like Infosys and Wipro in the large cap space, and KPIT in the mid cap space. That's a company that we believe fundamentally should do very well. Our analyst is expecting a 30% growth, around 13% growth in top line for KPIT in FY 16, translating into a bottom line growth of 26% in FY 16 for KPIT, and we are expecting the ROAs to move up from 18% to around 20.2%. And the stock is trading at 9.1 times FY 16 earnings.
Okay, the other talking point, at least for the morning, is going to be that big mega $2.5 billion acquisition by Cognizant. They've acquired a US company for in consideration of $2.5 billion, Trizeta, which largely is in the business of healthcare. Cognizant gets 26% of its total business from the healthcare vertical, so they are clearly looking at inorganic growth in the healthcare business, given the kind of market opportunity which lies for Cognizant in the US. Ajay, do you think post this Cognizant acquisition, the big four could be under intense pressure to utilize their cash? Because most of the IT companies have defended their cash position by saying that we are conserving cash for strategic purposes, and now Cognizant has taken a big leap.
I tend to agree with you, Nikunj. It's been a long time coming. I think the cash bulge is just increasing in the big four, and that also is leading to deterioration in the return ratios, be it ROE or ROCE, and that's a cause of concern. Investors have been waiting for a significantly large acquisition, especially from companies like Infosys. And if you recollect, there have been calls from some of the leading lights who had served in Infosys till some time back, be it Mr. Pai or Mr. Bala, that in case the company doesn't see any strategic acquisition on the anvil in the near term, it would make sense for the companies then to go in for an aggressive buyback or a large dividend payout. So I think the pressure, the longer they resist, the longer they put off going in for a strategic acquisition, the larger will be the pressure from various stakeholders on these companies to either go in for a buyback or go in for a one-time large dividend. So I think all eyes will be on these companies, especially in light of today's development, about what route they take insofar as acquiring companies which have a strategic fit with their business.
Okay, SBI is one stock which is going to be in focus in today's trading session. Remember, they've revised their interest rates on retail term deposits below 1 crore rupees. They've also revised the interest rates on, or rather cut rates on deposits for 1 to 3 years to about 8.75% from the earlier 9%. And they've hiked rates on deposits from 180 to 210 days to 7.25% from the earlier 7%. So that, of course, is going to be one stock to look out for. Let's take a quick break. Then on that note, okay, let's quickly bring on board Ms. Arundhati Bhattacharya, Chairman at SBI as well. Ms. Bhattacharya, hi, morning. Good to chat with you today. Firstly, the reason for this revision in rates?
The reason is basically liquidity management. We have a lot of liquidity and we are seeing very poor credit growth. Therefore, it was thought that we needed to cut the rates in the 1 to 3 year where we have the maximum deposits. And of course, you know, the fact that inflation is also down, we are a little satisfied that we will still be giving a positive return to our depositors. So that is the idea behind the rate cut in the 1 to 3 year bucket. In the 180 days to 210 days, that is basically again ALM mismatch was there in that bucket because the rates there were 200 basis points lower than the rates in the 1 to 3 year. So we were not getting any deposits in that bucket, and in order to take care of the ALM mismatch there, we have changed the rates there.
So by when do you expect credit growth to actually pick up?
I don't see it picking up before January, that is post-December only.
But at a time when deposit growth is low in the industry, can you actually afford to cut deposit rates?
Deposit rates, the growth is actually much more than the offtake of credit. So there is no point in comparing it in absolute numbers. If I have a lot of deposits and I don't have credit offtake, then also there is a liquidity mismatch. In the sense I have too much of additional liquidity.
Looking at revising the deposit rates for other tenure as well, and especially for long-term tenure?
No, we had already cut the deposit rates at the lower end, if you remember, about a month or so back. So this was the only bucket where we had not cut, mainly because most of our deposits are in this bucket. But we felt that we have adequate liquidity in the bank and therefore we have cut the rates here.
Is this an indication from India's biggest bank that interest rates in the system are likely to inch down? It may not happen in this quarter, but next quarter interest rates will come down?
No. I'm not trying to give any indications or anything of the sort.
We thought that local institutional investors are back and this market will have enough and more support from local participation. Flows have dried up once again.
Yes, I think as you said, LIC, it appears, is clearly booking some profits and creating space for a torrent of paper that is expected to come from the government. The government has a very ambitious disinvestment program running into around 40 to 50,000 crores. So I think that sort of is putting some sort of a cap on the Indian markets. But as I said, I think with the macros improving quite substantially, oil prices being benign, and let's not forget that even the other commodity prices, be it coking coal, thermal coal or iron ore, prices are nearly 50% off from their last peaks, which had sort of reached the peaks 3 or 4 years back. Agri commodities are at a 4-year low globally. So I think the commodity environment continuing to remain benign spells extremely good news for the Indian equities. And that sort of should lead to some sort of a support. In my opinion, the markets will find support on dips, and till such time that there is some reversal in oil, I think one should not, one can expect that a large drop in the Indian equities can really be ruled out.
Right. Ajay, comment on Bharat Forge and Motherson Sumi. Motherson Sumi is a pure auto ancillary company and Bharat Forge is an engineering company. So at a time, why are both these stocks, which represent different businesses, are moving in the same direction?
I think Bharat Forge, a significant chunk of their revenues essentially come from the auto sector. They supply forgings to the commercial vehicle industry, both in India as well as Europe and America. But what the market is betting on, in addition to that, is the company's foray into the defense sector and their plant that has come up in Baramati for industrial forgings. I think they are looking at scaling up supplies to defense from that plant. And that is what is keeping the interest in investors in Bharat Forge. And in case of Motherson Sumi, it is the large orders that they have got in Europe running into a few billion euros, which they'll start executing soon. That is expected, that is driving the interest in the stock. Also, the inclusion of Motherson Sumi in some of the global indices that happened over the last few weeks also is keeping the interest buoyant in the stock. We are very positive on both the stocks. In fact, they figure among the top buys in the auto sector for us. And in particular, Motherson Sumi is a stock that we are very, very positive on. We are expecting roughly 18% CAGR in revenues for Motherson Sumi in 15-16, and that will boil down to a growth of around 18% in bottom line this year, and a bottom line growth of around 50% next financial year. Stocks ROEs are moving up from 33% this year to 38% in next financial year, and stock is trading at 22 times. So I think as part of the core portfolio, I would advocate investors to look at Motherson Sumi closely, although the stock has an exceeding level over last 1 year.
Well, some other pockets of weakness in yesterday's session, and Yes Bank clearly was one such case in point. The FI limit has been hit. More importantly, it's now excluded from the MSCI index as well, and that's going to be a sentimental dampener on Yes Bank too. It's lower by about almost 5% in yesterday's trading session. Voltas, SKS Microfinance, these were some of the names which did see some profit taking coming in. On the flip side, names like United Spirits held out quite a fair bit. Ajay, what's the house view on United Spirits that you have? Buy into declines, or is it still an avoid stock?
Unfortunately, it's not in the coverage universe of our research desk, and it would be highly inappropriate for me to comment on the stock.
Okay, well, United Spirits managed to buck the trend despite bad news and that fat write-off they had reported for FY14. JSPL and Hindalco, they corrected on strong volumes. Ajay, what is driving JSPL down? I mean, most of the market participants are of the view that the final Supreme Court judgment will not be all that harsh, and some of the existing power stroke mining companies, they will get away with the penalty. That actually is good news for JSPL, but JSPL has come down from levels of 250 to 230 once again.
Yeah. I think the market clearly seems to be avoiding these stocks in the run-up to the Supreme Court verdict. And as you said, that the fact that Supreme Court has not deallocated the blocks, termed them illegal but not deallocated, and the government also has made a plea for 46 blocks to be spared, I think is heartening from the market perspective. But I think the market would like to wait, digest the Supreme Court verdict, and once they get a clear idea of how things would move, only then we would find funds coming back in a large way in metal stock. Also, the fact that the slowdown in China is weighing heavily on global commodity prices, and hence the interest from the foreigners into the metal stock also is tepid at the current juncture.
Good chatting with you. Really appreciate you taking the time out and speaking with us today. That's the view from Ajay Bodke, from Prabhudas Lilladher. Quick break. When we come back, chat markets with Saurabh Mukherjee from